There's a number buried in your policy right now, and it quietly decides how much your next bad day will cost. You chose it, even though you probably don't remember. It took maybe 4 seconds, somewhere between entering your birthday and clicking purchase, and nobody ever explained what you were actually deciding. Today, that changes. That number is your deductible. And here's the sentence that makes everything else click. Your deductible is the amount of every claim that you agreed to pay yourself before your insurance company pays anything at all. That's it. That's the whole concept. It is not a fee. It is not a penalty. It is a deal you struck. You said, I will buy the first slice of any accident if you cover the rest. The size of that first slice is the number you picked. $500, $1,000, whatever box you clicked. So why does it exist at all? Why doesn't insurance just pay for everything, first dollar to last? Because insurance was never designed to cover everything. It was designed to protect you from the losses you couldn't survive on your own. The crushed front end, the stolen car, the tree through the windshield. The deductible is the line you drew between the damage you can absorb and the damage you can't. Everything below the line is your problem. Everything above it is theirs. Now here's what nobody ever explained, because most people think the deductible applies to their whole policy. It doesn't. It applies to some coverages and not others, and knowing which is which changes how you read every page of that policy. Your auto policy is not one product. It's a bundle of separate coverages stapled together, and each one answers a different question. Liability coverage answers, what if I damage someone else or hurt them? Collision coverage answers, what if my car hits something or gets hit? And comprehensive coverage answers, what if something happens to my car that isn't a crash at all? Things like theft, hail, fire, a deer at dusk. 3 different questions, 3 different rules. And here's the part almost nobody knows. Liability coverage, the part that pays other people when the accident is your fault, generally has no deductible at all. If you cause a crash and the other driver's bumper is destroyed, your insurer pays them without sending you a bill for the first $500. Why? Because liability protects them, not you. The law and the policy want the injured party made whole, not stuck waiting on your share. Your deductible lives in the other 2 places, collision and comprehensive. The coverages that fix your own car. And often, those are 2 separate deductibles with 2 separate amounts. Check your declarations page, the summary sheet at the front of your policy. You might see collision for $1,000, comprehensive for $500. 2 lines, 2 numbers, 2 different deals you made, possibly without noticing. So, let's make this real. Say your collision deductible is $1,000 and you slide into a pole. The repair estimate comes back at $4,000. The body shop fixes the car, your insurer pays $3,000 and you pay $1,000. That's the slice you bought. Now flip the numbers. Same deductible, but the repair estimate is only $800. What does your insurer pay? Nothing. 0. The entire bill sits below the line you drew. Your coverage is real, your policy is active, and it still pays nothing because the damage never climbed above your share. Have you ever heard someone say their insurance refused to pay for a repair and felt a little spike of fear? Well, take a deep breath, because a lot of the time, nothing was refused at all. The damage just came in under the deductible exactly as the contract said it would. The system worked precisely as designed. It's just no one ever explained the design to you. Here's another thing nobody mentions. Your auto deductible resets with every single claim. Health insurance, though, works differently, and that difference confuses everyone. A health insurance deductible is usually annual. You chip away at it all year, and once you've paid it, your plan starts sharing costs until January resets the clock. But your car insurance deductible has no memory. It's per claim. Back into a guardrail in March? Well, you'd have to pay your collision deductible. Hail dents your hood in July? Yep, that's your comprehensive deductible. 2 claims, 2 deductibles, no running tally. Each incident starts the meter at 0. So who decided your deductible? You did, technically. But let's be honest about how. Somewhere in the quote process, a drop-down menu offered you a few options, and next to each one was a monthly price. And you watched something interesting happen. The higher the deductible you chose, the lower the premium got. The lower the deductible, the higher the premium. That's not a coincidence. That's the entire machine. Think of it as a seesaw. Premium on one side, deductible on the other. Push one down and the other rises. When you accept a bigger deductible, you're telling the insurance company, I'll handle more of the small stuff myself. Small claims are frequent and expensive for insurers to process. So when you take them off the table, your risk costs less to insure, and the company charges you less every month. When you choose a small deductible, you're asking the company to step in earlier and more often, and you pay for that convenience in every single bill, whether you ever file a claim or not. This is the quiet trade at the heart of your whole policy. A low deductible is not free protection. It's protection you're prepaying for month after month in your premium. Some drivers choose a higher deductible because they'd rather keep the monthly cost down and absorb a bigger hit if something happens. Other drivers choose a lower deductible because a sudden $1,000 bill would wreck their month, and the steadier monthly cost feels safer. Neither one is wrong. They're just two different answers to the same question. Which kind of pain can you handle better, a slow drip or a sudden bite? Only you know your answer. But you should be the one answering it, not a drop-down menu you clicked past in 4 seconds. Now for the counterintuitive part. There are moments when your deductible seems to vanish, and if you don't know why, the whole system feels random. Picture this. You're stopped at a red light. Someone rear-ends you. The crash is entirely their fault. Do you pay your deductible? Often no, because their liability coverage, the part with no deductible, remember, is what pays to fix your car. Your own collision coverage never even enters the room. Your deductible only applies when your own policy is the one paying. But sometimes it's tangled. Maybe fault takes weeks to sort out, or the other driver's insurer is dragging its feet and you just want your car back. So you file under your own collision coverage, pay your deductible, and get repaired. Then something happens behind the scenes with a name nobody outside the industry uses. Subrogation. In plain English, your insurance company goes and collects from the other driver's insurance company. And if they recover the money, they may reimburse some or all of your deductible. It isn't guaranteed and it can take months, but when it works, a check shows up later and most people have no idea why. Now you do. That's your slice coming home, because someone else's policy was always supposed to pay for it. One more wrinkle: windshields. In a few states, insurers can't apply your deductible to a windshield claim at all if you carry comprehensive coverage. And a few others require insurers to at least offer zero deductible glass coverage as an option. That's why you may have seen ads promising a free windshield replacement. That's not generosity. It's actually state law, and it varies by state. So check yours before assuming your cracked glass is covered in full. There's one last place your deductible hides, and it's the one that stings. If your car is totaled, meaning the damage costs more to fix than the car is reasonably worth, your insurer doesn't pay for repairs. Instead, it pays you the car's actual cash value, what the car was worth the moment before the crash, minus, you guessed it, your deductible. The slice comes off the top, even at the very end. A car worth $8,000 with a $1,000 deductible becomes a $7,000 check. That number surprises people at the worst possible moment. It shouldn't have to. So, what does all of this mean for you? Pull out your declarations page or open your insurer's app. Find two numbers, your collision deductible and your comprehensive deductible. Don't change anything. Just look at them and ask one question. If something happened tomorrow, could I actually cover this number without flinching? If yes, your line is drawn in a reasonable place. If the number made your stomach drop, then the deal you clicked past in 4 seconds may not be the deal you'd make today, and your next renewal notice is your chance to renegotiate it with your eyes fully open. Because here's the truth underneath all of it. Insurance companies aren't hiding the deductible from you. It's printed right there on the first page. They just know that many people were never taught to read it. The fine print isn't invisible. It's just never been translated. And every time you translate one more piece of it, you stop being the person who just signs where it says sign, and you start being the person who understands the deal. There's a number buried in your policy right now. It still decides how much your next bad day will cost. But the next time that drop-down menu asks you to pick it, you won't click past it in 4 seconds. You'll know exactly what you're deciding.